Hello, everyone, and welcome back. This week's focus is US Tech 100. The index started this week strong. It was up on Monday, but by Tuesday, it's erased it all. And the trigger wasn't the Fed or CPI, it was actually Samsung. Now, let's get into it. Samsung just dropped its initial Q2 numbers. Record profit, record revenue should be a headline win, right? Instead, the stock's down almost 10%, and that's spreading into AI linked tech sentiment across the board. And look where it's sitting on the chart. On the daily, US Tech 100's been going sideways after that whole uptrend, and we've got two rejections stacking up at basically the same level. That's a double top sitting right on the trend line. The bar was already set for perfection for Samsung, so great just wasn't great enough. And here we're seeing sideways move on the daily, but if we zoom in, it reveals more. Now on the 1 hour chart, this is where it gets interesting. It's not just sideways chop. Price is actually tightening up. Lower highs, higher lows. It's squeezing into a triangle formation. That's a market holding its breath before it usually picks a direction. Resistance sits at the triangle trend line. If this breaks, the range higher near 30,700 and the range low around 28,000 are back in play. What could force this break? We've got the catalyst lined up to do it: ADP employment change and the balance of trade both landing this week. But the big one is the Fed's high impact, and it could be exactly what pushes this triangle off the fence. So this isn't a guess the direction trade, it's a wait for the break.